Looking for an undervalued, high-quality stock in today's expensive stock market? Want to also collect a market-beating dividend? Would you also like double-digit dividend growth on top of that? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel. I'd really appreciate it. And make sure to stay tuned until the end of the video for a special news announcement. I want to tell you about a high quality stock that pays big, growing, reliable dividends. These growing dividends are funded by growing profit because this business is providing critical sovereign defense products and services. Let's be honest, we live in reality. And in reality, human conflict is unfortunately part of the human condition. That's been true since the beginning of time, and it'll be true until the end of time. Businesses that cater to this basic truth profit handsomely from it, and so do their shareholders, with safe, growing dividends to show for it. I personally invested in stocks just like this one on my way to going from below broke at age 27 to financially free at 33. Best of all, the stock looks undervalued right now. Price is what you pay, but value is what you get. Why is that important? Because buying a dividend growth stock when it's undervalued should provide for a higher yield, greater long-term total return potential, and reduced risk. With this in mind, I want to share with you an opportunity I recently came across in shares of General Dynamics Corporation, which appear to be trading at a significant discount today. General Dynamics Corporation, stock ticker GD, is a global aerospace and defense company. Founded in 1899, General Dynamics is now a $51 billion by market cap company that employs over 100,000 people globally. Some of their major platforms include the Stryker combat vehicle, Abrams tank, the Virginia-class nuclear-powered submarine, and Gulfstream business jet. In addition, they offer a suite of IT services. Fiscal year 2020 sales are broken up across the following business segments: technologies 34%, marine systems 26%, aerospace 21%, and combat systems 19%. The US government is responsible for approximately 68% of the company's revenue. Investing in a defense business doesn't require taking a big leap of faith. One must simply believe that sovereign entities will want to continue protecting their interests. Unfortunately, part of the human condition is human conflict. This is reality. And companies that provide the very best defense capabilities will continue to thrive because of our reality. An industry oligopoly only serves to strengthen that thesis. The company's unique set of businesses also set them up incredibly well. While they do manufacture traditional warfare machines like tanks, the company is actually more exposed to the IT side of defense. Their $9.6 billion acquisition of CSRA in 2018 turned it into a major provider of IT services to the US government. The company's technologies business segment, their largest, provides data, cloud, and virtualization services. Conflict is increasingly becoming digital. That positions this company perfectly. In addition, the company has a rather significant amount of aerospace exposure via their Gulfstream business. As this entire sector rebounds from the pandemic, General Dynamics should see this area of the company accelerate growth off of a low base. All this bodes incredibly well for the company's future profit growth and dividend growth. Speaking of that dividend growth, the company has increased its dividend for 30 consecutive years. Their last dividend increase, announced only weeks ago, was over 8% during a very difficult period for aerospace. Talk about reliable. This increase isn't that far off from the stock's 10-year dividend growth rate of 10.2%. Considering that the stock yields 2.7%, this is a very nice combination of yield and growth. This yield, by the way, is 50 basis points higher than the stock's own 5-year average yield. This attractive growing dividend is also safe. The payout ratio is only 43.3%. I view the sweet spot for a dividend growth stock to be a yield of between 2.5% and 3.5% paired with a mid-single digit or better dividend growth rate, and this stock is squarely in that zone. Looking at business growth, General Dynamics grew its revenue from $32.677 billion in fiscal year 2011 to $37.925 billion in fiscal year 2020. That's a compound annual growth rate of 1.67%. Meantime, earnings per share increased from $6.87 to $11 over this period, which is a compound annual growth rate of 5.37%. Excess bottom line growth was greatly aided by share buybacks. The outstanding share count is down by approximately 22% over the last decade. On the face of it, this is middling growth. However, this 10-year window is sandwiched by the US fiscal cliff on one end and a global pandemic on the other. In my opinion, this gives us a distorted and disingenuous picture of the company's true earnings power. Looking forward, CFRA is predicting that General Dynamics will compound its earnings per share at an annual rate of 11% over the next 3 years. While perhaps slightly aggressive, I do see that as a better approximation of the company's true earnings power. CFRA believes that there will be a strong rebound in the aerospace segment. They see aerospace revenue returning to pre-pandemic levels by the fourth quarter of 2021. In addition to that full aerospace recovery, there's the record high backlog of $89.5 billion the company is enjoying and working through. This backlog grew 9.8% for the fourth quarter of 2020. Simply put, there's no shortage of opportunities for General Dynamics. Investors don't need to perform complex calculus here to see that the company is going to be making a lot of money for many years to come. When factoring in the low payout ratio on top of the economic rebound, the dividend should easily be able to grow at a high single-digit rate for the foreseeable future. It wouldn't surprise me to see future dividend raises back in the double-digit range. Moving over to the balance sheet, General Dynamics maintains a very solid financial position. The long-term debt-to-equity ratio is 0.64, while the interest coverage ratio is over 8. I view the interest coverage ratio as artificially low due to EBIT that has been temporarily compressed by the pandemic. The company's balance sheet is deceptively strong, and their overall financial position will almost certainly be improving sharply in coming quarters. Profitability is robust. Over the last 5 years, the firm has averaged annual net margin of 9.16% and annual return on equity of 26.42%. There's a lot to like about General Dynamics. You have a record high backlog and what should be an intense recovery in aerospace. Plus, there's the heavy IT exposure. And the company is protected by durable competitive advantages that include economies of scale, an industry oligopoly, lengthy contracts, established geopolitical relationships, technological know-how, switching costs, and barriers to entry. Of course, there are risks to consider. Regulation, litigation, and competition are omnipresent risks in every industry. The industry's oligopoly limits competition, however, close government relationships heighten regulatory oversight. The company is acutely sensitive to any changes in the U.S. Department of Defense budget. All defense companies face geopolitical risk. Any unforeseen setbacks regarding the pandemic will likely negatively affect the company's aerospace business. That aerospace business is cyclical. Any downturn in the economy would reduce demand for business jets. The CSRA acquisition is still unproven over the long term, and the company will have to continue to acquire large IT contracts in order to eventually fully rationalize that acquisition. Overall, I view this as a wonderful business, and with the valuation currently being so attractive, it's a compelling long-term investment idea right now. The stock's price-earnings ratio is 15.9. That compares extremely favorably to the broader market, and it's also well below the stock's own 5-year average PE ratio of 16.8. I think this comparison is even better than it looks due to the fact that the pandemic has hit the company's trailing 12 months earnings per share. There's also cash flow to look at. The price to cash flow ratio of 13.1 is way off of its 3-year average of 17.2. And the yield, as noted earlier, is significantly higher than its own recent historical average. I valued shares using a dividend discount model analysis. I factored in a 10% discount rate and a long-term dividend growth rate of 7.5%. This is not an overly enthusiastic dividend growth rate when compared to the stock's 10-year dividend growth rate. It's also below the most recent dividend increase, which came in during a pandemic. With a low payout ratio and a earnings per share forecast in the low double-digit range, I think General Dynamics can easily clear this hurdle. The dividend discount model analysis gives me a fair value of $204.68. The reason I use a dividend discount model analysis is because a business is ultimately equal to the sum of all of the future cash flow it can provide. The dividend discount model analysis is a tailored version of the discounted cash flow model analysis, as it simply substitutes dividends and dividend growth for cash flow and growth. It then discounts those future dividends back to the present day to account for the time value of money, since a dollar tomorrow is not worth the same amount as a dollar today. I find it to be a fairly accurate way to value dividend growth stocks. Morningstar rates General Dynamics as a 4-star stock with a fair value estimate of $182. CFRA rates General Dynamics as a 5-star strong buy with a 12-month target price of $203. I came within pennies of where CFRA is at. Averaging the 3 numbers out gives us a final valuation of $196.56, which would indicate the stock is possibly 12% undervalued. Here's the bottom line, guys. General Dynamics Corporation is a fantastic business operating within an industry that benefits from an oligopoly. The record high backlog, unique industry position, and post-pandemic recovery sets them up for plenty of growth moving forward. With a market-beating dividend, a low payout ratio, double-digit long-term dividend growth, 30 consecutive years of dividend raises, and the potential that shares are 12% undervalued, Dividend Growth investors are advised to take a close look at this stock right now. And now for a special news announcement. Northrop Grumman Corporation, stock ticker NOC, was just awarded a $3.93 billion Missile Defense Agency contract by the U.S. Department of Defense. This is another high-quality defense business that continues to lock up huge contracts left and right. Our January video highlighted the stock as a great long-term opportunity. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about this stock. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This six-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over at Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.